Hi, everyone, and welcome to Stock Market Today, sponsored by Interactive Brokers. On the show, we're going to be taking a look at TransDigm, Shake Shack, and Pinterest. But first, let's take a look at those major indexes. It's Alyssa Quorum here with Ed Carson. And Ed, we did see a nice rebound today. The NASDAQ finished up about 1.4%. The S&P and Dow also up over 1%. But when you put this in the context of yesterday's bloodbath, we didn't even make up half of what we lost yesterday.
Yeah, I mean the Nasdaq barely got above the top of yesterday's action, and that was a low bar given that it was a gap down.
Right.
And we fell well over 3%. S&P and Dow was just an inside day. We had what we call a vertical violation. Yesterday, it's when you've fallen for a few days and you have a really big sell-off, 3% or more. We basically did that with the S&P and the Nasdaq. Changing character, it's like really a nasty sign, often a sign that it's going to take a while to work your way out of that.
Mm-hmm. Exactly, yeah. Even if we do head up from here, we could be facing resistance at that 50-day line, and there's a lot of damage right now, so it will take a little bit of time to repair.
And when we are in a stock market correction, we announced that overnight, and so that one is definitely a symbol that it's going to be a few days before you can have a confirmed rally. Mm-hmm. This is just day one. You often see a bounce. I mean, we fell for 6 straight days, vertical violation or not. You see that a lot. So this is not saying, hooray, we're all back in.
Right, exactly. Whereas some on Wall Street may be saying, buy stocks on sale. We really don't know when this bleeding will stop, so it's best to wait for that confirming indicator before jumping back in. All right, well, let's take a look at a few individual names that are looking really good. 2 stocks that moved big on earnings today, starting with TransDigm, which gained big. It did close not quite in the upper half of its trading range today, but it was a huge gap up and finished up about 14% in heavy volume after some technical damage in the prior 2 sessions.
Yeah, some damage in the prior 2 sessions, but if you look at the relative strength line, that had held up reasonably well. I mean, obviously, the market was selling off. This came down, but yeah, went through the 50-day line, really gapped higher. I mean, it gapped well beyond the buy range of a prior entry. Technically, you could buy this. I think the buy point was 306.10, and that's the opening price of today, and it rose well above that. We actually added it to leaderboard today because of that action, but I think most investors should be thinking this is a correction. Should be extremely cautious about buying anything at all.
Right. Even though the fundamentals are really strong and we saw accelerating growth on the top and bottom line. So that's good to see. Mm-hmm. It's just these overall market conditions that are not making it a good time to be aggressively buying.
Yeah, I mean, look, if you look at all the stocks that have fallen, it's like, oh, they're great stocks. They fell with the market. I mean, so yeah, it had a great day today, but let's just face it, the stocks rise and fall with the market, and the trend has not been great. So this is not a great time to be buying stocks.
That's right. And Shake Shack also moved big on its quarterly earnings report today, closing up about 18% in heavy volume. Now, looking at Shake Shack's chart, it's been holding up really well here after a breakout in June, and it's now skyrocketed past that 20% profit-taking zone.
Yeah, and it was sort of an interesting action today. It gapped up a little bit, but nothing tremendous, and then it just kept going and going and going.
Closing right at the top.
Yeah, I mean, whereas TransDigm and some of the others that gapped up today on earnings sort of like gapped up and sort of moved sideways. This one really just kept on going on. It's sort of, but this one was well extended. Its earnings have actually been falling, but there's sort of a sense that they're investing for the future. Their sales growth is really strong. I think it was 31% in this last quarter. So it's just, it's been doing really well, and a lot of restaurant stocks are doing well right now.
Yeah, the fundamentals aren't quite what your typical can slim style stock would be, but the technical action very strong. That relative strength line at a new high as the stock continues climbing. So if investors did buy at that last breakout with the market headwinds that we're seeing, maybe selling into strength here if you did decide to hold this one if you have a big cushion.
Yeah, you could always sell that or take partial profits. If you think it's a huge winner, you can always sort of get your teeth, but know what you're getting into. It's a correction, so it's just tough for any stocks. absent these big earnings days to move forward.
All right, well, we'll keep an eye on that one, and we want to check in on a relatively recent IPO, Pinterest. Now is starting to carve out the right side of a cup base here. It's really closing in on that $35 mark after gapping up on its earnings report not too long ago.
Yeah, it came just a few cents shy of its all-time high. Better than expected results, and it's been holding in there. I mean, it's sort of like you could stick a pin in this one because, it's not a buy now, it's not a good market.
Right.
But if you see, if the market turns around and this, busts through, that would be a positive sign. Really strong volume on those earnings. Obviously, you often see strong volume on earnings, but this was the strongest volume since its IPO. Maybe big institutions said, hey, this is really turning around and you're seeing a path towards profitability.
Right.
And so maybe some institutions stepped in and bought up some shares. So.
Yep, Pinterest not yet profitable, but logged sales growth at 62% in the most recent quarter, marking acceleration, which is nice to see. We want to be looking at IPO stocks that, if they're not profitable, at least have really strong sales growth.
Yes.
All right, everyone, thanks so much for watching today. And before we go, if you haven't watched it yet, make sure to check out our new video series, Investing Strategies with IBD at NASDAQ. This week, I spoke with Randy Watts. He's the Chief Investment Strategist at William O'Neill & Company, an affiliate company of IBD, talking about these overall market conditions that we're seeing with the heavy selling that we saw yesterday. Where do we go from here? What are some of those factors that are impacting conditions and how you should handle your portfolio? So make sure to check that out at investors.com/investing strategies. All right, everyone, thank you so much for watching today, and we'll see you right back here tomorrow.